Well, the Nifty fell around 0.6%, 0.2% down on the Nifty 50 index. And let's quickly call out some of the key losers in trade. HCL Tech, Shriram Finance, HDFC Life, Tata Motors PV, which is some of the big losers in trade. 2.5% plus in terms of losses across all of those stocks. But essentially, it's the breadth. The advance decline was thin on the advances front with only 14 advances versus 36 declines that we saw. And that's what really drove the index lower. Bharti, Apollo Hospitals, Sun Pharma, DRL, which is some of the gainers on the Nifty. And there were quite a few in terms of the ones with absolutely wafer-thin gains. Nestle, Coal India, ONGC were just some of them where the gains were just extremely minuscule, and therefore the impact on the index was extremely small. Let's quickly also pull out some of the buzzers in trade. Happiest Minds, again, down 3.5% this time around, given the fact that there was the clarification that came out and the stock was a buzz yesterday. Plus, in line with how the IT also, the sector as a whole moved in trade today. EMS, Jain Resource, Bandhan Bank, which is some of the other casualties of the day, all down 2+%. Fino Payment Bank, on the other hand, was up 9% in trade. Biocon up 6.5%. PDS up 6.5%. IDBI Bank was the other one. MQ Pharma was also up 1% or so. We spoke a little bit about IDBI as well. I want to quickly take you through some of the sectors as well. And in terms of how the sector tilt is, the Nifty Pharma and the Metal Index were the two indices which traded in the green. Within the Pharma Index as well, there was Biocon, there was Divi's Labs, which was up nearly 4%. So those were some of your movers within the Pharma pack. Within the Metal pack, it was Nalco, Hindalco, and the like. So that was the broad-based tilt with regard to the index and how markets fared. Excuse me. Okay, with that, let me in fact switch focus. Try and give you a perspective on what's playing out in that metals pack. Parthiv Jonsa here, Vice President Anand, Rathi Institutional Equities. Excuse me. He's joining us this afternoon. Parthiv, great having you. Let me first start off, Parthiv, with what's playing out in China. You have a great pulse of this. I'll allow you to first give us a perspective.
Let me just put it across, because now that entire Middle Eastern is again, the noise around entire Middle Eastern is again picking up, right? It's at the end of the day, China is more to do with the volume game. It's 60% of every single thing, right? Whether aluminum, copper, steel, everything, right? Now, what is happening is not only China, we need to plug in the gaps with the Middle East as far as aluminum is concerned, or, your domestic or your Latin America as far as copper is concerned, and so on and so forth, right? So it's not only China as an overall scheme of things what we need to look at. It is also all the other geographies now which are equally more important. Even for Ferro, for example, you have now South of Africa again picking up. So everything goes in tandem with China. China is always a volume game, but as far as your pricing, as far as your nitty-gritty are concerned, you have a lot of other geographies what you need to play. Now, what is going on in China? China, at the end of the day, the volumes are very robust. Whether you talk about aluminum, steel, of course, has the volumes are going down because of its own internal requirement going down. But if you see the export volumes, for example, from China of aluminum has actually gone through the roof. So all these things, China with all the other geographies also needs to be taken care of as far as the entire metal is concerned, basically.
Right. And therefore, does it merit the kind of moves that we saw? Of course, we saw cool off thereafter, Parthiv, on some of these aluminium names. But we've seen a cool off in general in metals as well. Do you believe that that cool off, one, was warranted? And two, are we in at now a position where we could see a fresh rally from here, a bit of a re-rating or an uptick likely, given the context that you've just kind of culled out for us?
That's actually a very good question, because we need to break this into major 2 or 3 different buckets, right? Now, as far as aluminum, you rightly pointed out, the prices went down from, say, 3,800 odd levels to 3,200, maybe 3,150 levels. That was because, the entire noise around Middle East went off. But if you see right now, Chalco results are expected, and the preliminary numbers are very robust, right? That would actually form a very good base for companies like Vedanta, Hindalco, Nalco in India at the end of the day. So whether this pricing of 3100 is sustainable, it's at a lower end. I think a good level would be 3300, 3400 as far as aluminum. So yes, it can move up. Quarter one definitely would be good, but quarter two would also keep on sustaining at the end of the day. Now, as far as your copper is concerned, I think there is not a major fall in copper prices. It is still sustaining at about 13,400 odd levels, and that is a very good level to play a copper cycle. What I feel that prices of Hindustan copper going down below 500 was a bit of a overdone, and I think that would form a support. As far as steel stocks are concerned, Steel Authority going down, Tata Steel going down, they all form a good support level. So it is practically buy at dips. So we have a buy on each and every ferrous name out of all the four names, whether it be JSW, Jindal Steel, Steel Authority, and Tata. So we have buy on all the four, and we feel that as and how you progress into quarter two is which is usually a very weak quarter. As and how you progress to quarter three, things will improve. You are very well on track to do that 8-9% of a volume growth in this year. All your tier one mills in steel have given a very robust guidance, and I think you are very well on track to do that.
And what would play the dampener here? What's the risk factor, Parthiv? Because we have seen a cool off in prices now, and you're saying that those will likely mean revert. This is from where the support levels are, and this is from where it will mean revert. But talk to us about what could play the dampener, especially the way in which metal prices have rallied and cooled off 6 to 8% now. What's the trend from a pricing perspective going forward on steel, on aluminium? You've kind of highlighted it from 31 to probably 33, 34. But talk to us about some of the others, copper and steel primarily.
So I'll start with copper. Copper in our estimate, if you see, I have already taken at 13,100 and thereafter 12,800. So in my entire DCF of Hindustan Copper, I think I'm very well placed as far as copper is concerned, right? Because at the end of the day, rupee depreciation and or increase in LME will support Hindustan Copper's revenue at the end of the day, right? Now that's number one. So I think I'm very well placed as far as copper is concerned. As far as aluminum is concerned, I'm very well in the money. So as far as dampener is concerned, I'm not too worried about these two counterparts until unless there is something structurally wrong happening, which I don't think so as on date is going to happen. If the noise around Middle East increases, the aluminum prices are expected to go up from here at a time when your raw material costs are under control, right? So this actually supports your margins to a great level. If you see China right now, just moving back to China, they were making record profit. The aluminum smelters were making record profitability of over $1,200 about 2 months back. Even today, they are making over $1,000, right? So I think that is a very good level to play. As far as steel is concerned, your long price are which is down substantially from a 60,500, 600 odd levels to right now 49,800. I don't think so. This price can go down further. There are good chances of this supporting and sustaining going forward at the end of the day. So as and how we exit Q2, as and how your infra and construction picks up, you are very well to do that volume growth very well. Your prices will be supported. Even in our estimate, as far as HRC is concerned, we have taken at a $55,000 rupees per ton of an estimate in our HRC estimate for 27 and 28. So we are very well in the money.
Okay, yeah, so there is comfort from a pricing perspective. Talk to us about, therefore, what the upsides from here look like. We've seen a very decent correction, 10 odd percent, even among the frontline names, Tata Steels and the like. How should one play it? If you can give us your top stock calls. And second, what are the broad upsides like? If you can give us specific upsides, great, but otherwise the broader upside.
Absolutely. For example, Hindustan Copper, we have a upside from current CMP. We have upside of good almost about say 30% from here, and this is purely on DCF, right? We have not considered EV EBITDA multiple. This is purely on DCF valuation. As far as your companies like any tier one steel companies are there, right? For example, Tata, we have a target price of about 230, 240. Similarly, we have a substantial upside for Steel Authority, JSW, and Jindal Steel. What would also happen is once you start moving to Q2, Q3, you will also move your estimates from 28 to 29. That will also provide a substantial cushion to your upside at the end of the day. So I think prices going down for ferrous or for non-ferrous also acts as a base or a support. You can start adding at the end of the day, in my opinion.
Okay, noted. You've also you also cover IMFA, which is Indian Metal and Ferroalloys. Talk to us about what the thesis there is and whether that could be a better play versus some of the others, just given that the market in general has corrected for the metal companies, and therefore could the upsides there be better?
Absolutely. So we are a brokerage house who actually cover infra, and I think we're the only one I said who cover infra. So just to give a story, the volume growth is very robust as far as infra is concerned. The management has clearly given out a guidance of 4 lakh ton and thereafter going to 4 lakh 75 in 27 and 28. At the current pricing, also what I'm expecting is, every quarter in 27 at least would be a record particular quarter, right? Record Q1, record Q2, and so on and so forth. So we are very comfortable as far as infra is there. Our target price is over 1800. So we have a substantial room to grow even from the current CMP, right? The prices came off with the entire noise around South Africa that, volumes will grow and eventually that will impact your overall pricing and everything. We need to understand infra. For the existing facility, they used to export 90% of its overall volume, right? Now, with this entire KNR acquisition, what they have done from Tata, they'll cater to domestic. So they are very well placed as far as your, ferrochrome is concerned, as far as your stainless steel cycle is concerned. Of course, the pricing will keep on moving up and down. That's a factor. But again, you are getting a substantial volume support, and this is excluding, once your greenfield comes in, you'll also get a benefit of logistics. You'll move more towards the mines. You'll have a inbound and outbound logistics benefit that will actually support your EBITDA per ton also. On a normalized basis, where they used to do 21,000 of an EBITDA per ton, now the next leg would be of 23,000-24,000. So there itself, you have a 10-12% growth along with volume. So that will keep the momentum going, basically.
Point taken. Parthiv, last off, you've also sent me a note today with regard to Deccan Gold.
Yes.
You want to give us the thesis on that one, and what exactly or what's the angle or the line of thinking that an investor should think of when they're looking at Deccan Gold? Because revenues are virtually zero at this point.
Yes.
How should one look at the business in terms of how will the uptake play out?
So let me just give you a perspective, right? Any gold or a copper mine takes multiple years to kick off, right? People think that's a pre-revenue stage company and XYZ, right? So we have visited. So I personally have visited Kyrgyzstan, the mine at Altentor twice actually in a span of 1 year, and I have seen the progress happening. If you see the recent one, what we had visited about 2 weeks back, they're almost, your crushers are started, your ball mill is started, your gravity circuit is started. So they have already started making gold concentrate. The last step is basically just to do leaching, right? And thereafter you can make doré bar. So I think by August they'll start making doré bar. So your revenue will start kicking in. That mine has a potential to do about, say, 300 kilos of gold per annum, with the potential to grow 30% thereof, right? And also they have a 26% odd stake in Jonagiri, which has already commenced operation. So there also the volumes are going towards 600 kilograms, eventually going to about a ton, right, or even higher than that. That will keep the momentum going. What we saw 10 months back, what we saw today, there is substantial change in Altentor. We are very confident that within a quarter or two, your top line, your bottom line will be growing. So this is at the same inflection point where a lot of mining companies were there globally. It takes a couple of years to kick off an operation, but once it starts, there is no stopping, basically.
Okay. Parthiv, wonderful with regard to getting that sector overview and very patient conversation. So thank you for your time and for coming in and speaking to us.
Sure. Thank you so much.
Thanks. Okay, we'll sit on a very short break, come back, take stock of what to watch out for tomorrow. There'll be some cues that we'll have to kind of keep track of for the day of trade of Wednesday. We'll also try and talk about stock calls and also about levels that you want to keep on your mind for the day of trade of Wednesday. Stay with us. Welcome back and thanks for being with us. Meryl here with some of the cues you want to keep on your radar for Wednesday's day of trade.
That's right, bringing to you some of the major developments that could be seen shaping markets on the 15th of July. Globally, from the US, we'll be watching out for Empire manufacturing data. PPI is the one that is going to be in focus mainly, and we'll also be tracking the Fed's beige book. Industrial production will also be in focus in the Eurozone markets, while China will be watching out for GDP, retail sales, as well as industrial production. From Japan, we'll watch out for Japan's machinery orders and tertiary industry index. While back home, we've got a whole host of earnings to keep track of. From the Nifty pack, we've got HDFC Life set to report their results. And in the other names, there's HDB Financial Services, HDFC AMC, Angel One, ICICI Prudential Life, and many other names in focus set to report their quarterly results. We've also got the board of Sambhav Steel Tube set to mull a fundraise, and in other events to track. The major one that takes the cake is India UK Trade Pack, which is going to be in focus. Remember, the CETA comes into effect starting the 15th of July, so do watch out for any implications from that on the market as well. So yes, these were some major cues for you to watch out for on the 15th of July.
Okay, thank you so much for that, Meryl. Let me bring on board Kunal Parar of Choice Equity Broking to try and contextualize what we can expect in terms of the Nifty move on Wednesday. Kunal, it was a soft day Tuesday, but it was largely in line with where we actually started the day off. 150 odd points, we'll take that, right? Talk to us about what we can expect for the day of trade of Wednesday. Also, Tuesday was expiry, so that's behind us.
Well, good afternoon.
Very good afternoon.
If we talk about market and particularly Nifty, the broader market structure remains constructive despite short-term volatility, and Nifty is currently trading between a crucial support zone of 24,000 to 23,800 and a resistance band of 24,400 to 24,600. As long as index hold above the lower band, buying on decline continue to be the preferred strategies. And if we talk about today's close, Nifty has been close just above the 24,000 at 24,060. So we can expect some kind of bounce back in the Nifty for upcoming trading session. And yes, today was the expiry day, so yes, we have seen some kind of volatility as well for in terms of expiry. And if you talk about the fresh rally, then Nifty has to sustain about 24,600. And if it happens so, then the further door would be open for a fresh long rally in the market.
In today's day of trade, one was HCL Tech, Kunal. What's the view on IT broadly and HCL Tech in particular?
Well, trading at 1164, and we have seen some kind of profit booking from its intraday high. Yesterday stock made a high of 1237. Even it gave a breakout of 1170. Today it again entered below this level, so may see further downside momentum in the counter in form of profit booking up to the level of 1113. And if stock break this level, then further downside would be there even up to the level of 1085. Clear cut, it is showing some kind of channel rise strategies, and this is the standard we have been continuously talking about in media since long. And if you talk about overall IT, then no doubt TCS performed very well, Infosys performed very well, but again, my perspective, my point of view is like channel rise strategy would be the perfect, even it's TCS or Infosys or any other IT stocks, because IT stocks have been trading in a range bound momentum only, and one can say it's a time bound momentum. And if anybody want to invest in these stocks, then it would be proper if having a ultra long term period more than 5 years, because I'm not seeing any particular momentum on upper side even for medium term to long term.
What about Kunal? Any view with regard to a TCS, because that one was the one which really stood out in trade from among the IT pack?
No doubt, deal was there between the TCS and the ABP, and based on this deal, TCS performed very well from the level of 2000 to up to the level of 2228. Now TCS has strong resistance at 2235. Even earlier it was face the same resistance, and after it plunged up to the level of 1980. So TCS has to sustain about this 2235. If it happens so, then further march would be there towards an upward direction up to the level of 2450. Even it may goes beyond this level up to the level of 2600. But yes, Nifty TCS has to sustain about 2235. So if you want to create any fresh position, just wait for a time being. Let it sustain about 2235.
All right, so that's the level you want to look out for. Kalyan Jewelers, Kunal, that's the other very interesting one. Some very strong moves seen in the stock already. What next on a Titan, on a Kalyan, that entire pack?
A magnificent move that we have witnessed in this counter since last 4 trading sessions. At one point of time, it was trading at 375. Right now, it is trading at 529. It has already given a breakout of its previous top, which was placed at 455. Right now, trading at 530. Now, one concern is that stock is facing a strong resistance at 535. And if stock breaks these levels, then further upside would be there even up to the level of 620. So one has to wait for this level. If stock breaks this level, then yeah, some rally would be there. So at present level, my view is like if you are having this stock in your portfolio, just hold this stock as of now. And if you really want to create new position, then let it break 535. Now, if you talk about other counters like Titan, right now Titan is trading at 4,573, down by just 0.50%. Daily chart looks very attractive, and even weekly chart looks very attractive. Stock has already given a breakout of its previous top, which was placed at 4,530 level. Right now, trading above this level. Anybody want to get into the stock at present level? This is the perfect time with fixed stop loss of 4530. If you talk about target wise, first target comes at 4,680, and stock break this level, then further March would be there even up to the level of 4,800. So yes, compared to Kalyan Jewelers, I think Titan looks very attractive at present level for fresh position.
Okay, Titan over Kalyan. Kunal, your picks for Wednesday's day of trade.
Well, two stocks are there which looks very attractive at present level and the way market has given its flows. First is policy budget. Now, right now trading at 9520 level. One can keep SL at 9400. If it about target wise, first target comes at 9630, and if stock break is there, then further rally would be there up to the level of 9790. And second is my favorite, it's Asian Paint. In today's trading session, stock gave a very sharp upside momentum, and as well it has given a breakout of its previous top. Right now, stock is trading at 2640 level. One can get into the stock with fixed stop loss of 2590. If it about target wise, first target comes at 2680, and if stock break this level, then further rally would be there up to the level of 2740. So policy bazaar and Asian front from my side.
Kunal, thank you so much for joining us, giving us that perspective. We'll keep some of the stocks on our radar for Wednesday's day of trade. Appreciate you taking out time. And viewers, completely timed out on this edition of Market Edge. From me and everyone who's putting this show together, thanks so much for watching. More action on the other side. Stay tuned.